ETFs are generally seen as a safe, passive method to invest in the stock market to achieve consistent returns over the long term. ETFs have taken over as the investment vehicle for new investors in the stock market, with offerings from Vanguard, BlackRock, and other asset management companies out there. You know, the usual VOO or VTI S&P 500 ETF is seen as the best all-around ETF for beginner investors, as it tracks the S&P 500, it's consistent, and it's a relatively safe long-term investment with the expectation to earn around 7% annually over the long term. But what if you're someone that doesn't want one of these boring ETFs which just tracks the S&P 500, but instead you want an ETF that gives you exposure to some great businesses that are high growth companies, but still has a relatively passive element to it, just like VOO, for example? What if I told you right now that there is a growth ETF focused on growth stocks that has outperformed the S&P 500 over the last 5 years? This ETF has returned investors around 269% in gains versus the S&P 500's 53%. And guys, what if I take this a step further and told you that this ETF is something that you can buy today, just like how you buy any other stock in the stock market, to gain exposure to future potential gain that has consistently outperformed the S&P 500. Now, if you haven't guessed as to what company this ETF is with, we'll be discussing that in a second. But guys, as always, drop that like down below. It helps a ton with this channel. I haven't made an ETF video in a while, and if you want me to keep making some more ETF videos on, Vanguard ETFs or iShares or whatever, let me know in the comment section down below. So the ETF we're going to be discussing today is one that's by ARK Invest. Cathie Wood, she's been in the news a lot lately because of her stance on Tesla and ARK Invest's stance on Tesla. And today what I want to discuss is actually one of their specific ETFs. We're going to go into detail with that. We're going to look at the holdings and what makes this such an interesting ETF. So here's ARK's website, and we can see their key message here, which is that their ETFs are focused on innovation, and innovation comes from growth companies more often than not. With their ETFs specifically, they have 7 different offerings. 5 of the ETFs they offer are actively managed, meaning that ARK actually goes in and regularly buys or sells positions in those ETFs. So as the name implies, it's managed actively. And 2 of these ETFs are more passive. So the PRNT, which is a 3D printing ETF, and the IZRL, which is the Israel Innovative Technology ETF, are both passive. Now today I won't be spending a lot of time on most of these ETFs. If you want to see more dedicated videos on that, let me know. But what I do want to focus on is the ARKK ETF specifically, because this ETF has outperformed the S&P 500 so significantly in the last 5 years that we need to seriously take a look at this. Okay, so ARKK, this is the main ETF in my opinion from ARK Invest, and it's their innovation ETF as they call it. Here you can see some reasons they list as to why you may want to own this ETF. You get exposure to innovation, which means this ETF gives the holder multi-cap exposure to innovation across many different sectors, and we'll discuss this shortly by looking in depth at these sectors. ARK really believes that the stocks held in this ETF provide the best risk to reward opportunities, so it's the best of both worlds that you're getting here. Next is growth potential. This ETF aims to capture long-term growth with a low correlation of relative returns to traditional growth strategies and negative correlation to value strategies. So in other words, the focus here is growth. And now a big benefit to investing in this ETF is that ARK is known to be very diligent with their research. They actually take a lot of time and they use their wide team of professionals to find opportunities that traditional investors and traditional firms overlook, and that's usually where the opportunity lies. So this should give you a really good idea of what they're focused on, and you can really tell just by their core pillars here on what they're trying to sell you on, is that this business is focused on finding disruptive growth companies. And what I find interesting personally is that they're able to achieve this, as we've seen in their performance, while providing some relatively low risk to investors. And I think that's kind of where the appeal and the uniqueness of this ETF really lies. So now let's kind of look deeper into this ETF, go into the facts of this ETF and the breakdown for this ETF, and figure out what exactly is this comprised of and what makes it so appealing. Okay, so just a quick fact sheet here. The ticker symbol is ARKK, so you can can find that in your brokerage, and you can probably buy that as well during regular trading hours. Next, they have almost $5 billion of assets under management. Then here you can see that expense ratio is something that you always need to pay attention to when you're looking at ETFs. Because if you're not familiar with this, it is a fee that you pay automatically for holding that ETF. Now, Vanguard has a few ETFs that have no fees, I believe, but pretty much every other ETF out there does have a fee associated with it. With ARKK, you're paying a 0.75% fee, which is quite high compared to traditional S&P 500 ETFs, which typically have an expense ratio of under 0.10. But guys, this is the price you pay to be willing to gain additional exposure to high growth stocks and have it actively managed by ARK. And as we saw from the performance versus the S&P 500, this has paid back investors handsomely. Next is this ETF holds between 35 and 50 holdings regularly, and again, because it is actively managed, this fluctuates on an ongoing basis. Finally, the median market cap here is $3.6 billion. So in general, these are not penny type stock companies that ARK holds, and they're somewhat well-established names that are still growing rapidly. Now, more specifically here, we can see the heavy focus is on the medium to large size companies, and I would classify these as businesses that are established in a sense that they have good vision, they've executed well thus far, and they need to just keep executing to see even more success. The toughest days are typically behind these businesses, and there's a lot more upside and optimism in their future. Businesses like Square come to mind, for example, which fits perfectly within this range and proves this point exactly. Now here we can see the sector weightings, and this is important, guys, because this ARK ETF does hold a higher risk than your traditional S&P 500 ETF, so you want to see some sort of a diversification in here to balance out the volatility and risk. Here we can see the ETF is heavily skewed towards healthcare, that makes up around 36.6% of the sector, and this is followed closely by IT, which is around 31.7%. After these two heavy sectors, you get 13.2% of communication services, 10.7% of consumer discretionary, 4.1% of industrials, 3.6% of financials, and 0.2% unclassified. I personally found this breakdown very interesting because it shows us indirectly the sectors or industries where ARK expects to see the most innovation and disruption in the near future. And clearly with healthcare, they strongly believe that we'll see a ton of innovation, a ton of disruption. And with industrials and financials, they still believe the chance for disruption is currently fairly low. And this indirectly tells me that there aren't many businesses publicly available today that are disrupting those industries. Now, what I also like about ARK is the level of detail that they provide you with the specific holdings that they have. Yes, they show us a breakdown of the different sectors, and yes, they show us a breakdown of the different market caps, which is useful information, and typically information you'll find from other ETFs as well. But like I said, they take it a step further here, which is another reason why I'm intrigued. This breakdown here shows us the niches that their holdings play in, and how you get exposure to tiny slivers of possibly disruptive areas of innovation which can explode over the next few years. So sticking with the theme of healthcare and IT, we can see the top three weights are in e-commerce, gene therapy, and molecular diagnostics. But then you can also see some fair exposure to robotics, Internet of Things for 5G exposure, and cloud. And finally, you get a tiny bit of exposure to things like blockchain and space exploration. One thing that you will notice though with this list is that these are pretty much all in areas of growth and innovation, and many investors will agree that majority of these sectors will see some incredible innovation and growth over the next decade. So by holding this ETF, ARKK, you're making your life easier here because it removes that element of research required for individuals and looking into each stock and picking which stocks you want to build your own basket with. And it really puts that on ARK themselves. But of course, in exchange for that, you do have to trust their research, you do have to trust their picks, and you have to also pay them that 0.75 expense ratio as well. Okay, so now all this information has been building up to the most important part of this ETF, or any ETF really, and that is the specific holdings within that ETF. As of today, they hold 40 different securities, and this can change regularly like we mentioned. To view their most recent list, just go to their website and under Active ETFs, you can click on the Fund Holdings PDF. to get a list of all the holdings in PDF form. Now here's the latest list that you see, and you can see all the holdings listed out, including the number of shares they own, the market value of those holdings, and the weight of each holding in this ETF. No surprise here, guys, Tesla tops the list, making up a little over 10% of their portfolio, but I would say the top 5 holdings are really what sways the direction of this ETF in general. These stocks are Tesla, Invitae, Square, CRISPR, and Roku, and these 5 alone make up nearly 40% of the overall ETF. So if one of these 5 stocks flops and the assumption remains that the other 39 hold their ground, it would definitely put a meaningful dent in the performance of this ETF. Now what I've done is gone ahead and marked some notable holdings of stock I commonly see being discussed on YouTube. Names like Slack, Splunk, Xilinx, which we did make a video on recently, Spotify, and DocuSign are some big movers here that we've seen in the last few months, and these are all stocks that have benefited greatly from the lockdowns and work from home. I'd say after the top 5 holdings or so, the exposure is pretty evenly spread out amongst the rest, so this reduces risk in any of these businesses. Now, as a new investor who decides to possibly buy into this ETF, they can benefit from a fairly passive approach to owning some incredible high growth stocks with a relative low amount of risk but high future potential. Now, personally, I actually enjoy doing research in stocks and I like to pick out the stocks myself, but I know not everyone is like that. So this ETF may actually be very appealing to you. I'll say this, a lot of the stocks that they hold in there are companies that I want to own personally, but at current valuations, I just can't justify buying it. So as a result, just buying this ETF doesn't really sit that well with me at these prices, because it means that I'm indirectly buying these stocks at these current prices. However, that being said, for those of you that are high value investors, I love my value stocks, it does make sense to have some exposure, in my opinion, to growth stocks. Growth stocks, innovative stocks, disruptive stocks are the future. They're going to be changing industries like we've never seen before, and having a small portion of portfolio dedicated to that could result in some great gains over the long term. Trust me, my best performers for the most part have been these high growth, disruptive, innovative companies, while my value stocks just provide me some consistency, some dividend income, and just stability in my portfolio. The real money is really made in these high growth names like Tesla, for example, and if you don't want to own exposure to those companies directly because of risk, then it could make sense to have maybe 5-10% of your portfolio dedicated to this specific ETF. Now guys, remember, this was just one of the 7 ETFs that ARK owns. If you want to check out the other ETFs, check out their website. If you want me to make another video on any of the other holdings, or you want me to make this a series and cover all 7 holdings, let me know in the comment section down below, guys, and I will make that happen if there is interest in that. Either way, thank you so much for watching. Hope this video helps you, and I hope this kind of taught you a new way of approaching in high growth stocks with relatively low risk than directly buying into those companies. Either way, guys, thank you so much for watching, and don't forget to invest positively, and I'll see you in the next one. Peace.